Most people think the best investor of all time is someone like Warren Buffett or George Soros. But there's one man who beat them all, Jim Simons. His company, Renaissance Technologies, runs a secretive hedge fund called Medallion. Medallion has made an average of 66% profit every year for 30 years. To put that in perspective, if you had invested $100 in Medallion in 1988, it would have grown to $398 million by 2018. How did he do it? Unlike other investors who read company reports, watch the stock market, talk to CEOs, Simons ignored all of that. Instead, he hired math geniuses and scientists, people who knew nothing about finance. Simons believed the stock market followed hidden patterns, just like a secret code. His mission? Crack that code using math, data, and computers. This is the story of how a math professor became the world's greatest investor. Jim Simons was always searching for something bigger. He became a top mathematician. He worked at MIT and Harvard. He even helped the US government break secret codes. But he wasn't happy. In the 1960s, Simons worked for a top-secret research team that helped crack Soviet military codes. But when he spoke out against the Vietnam War, he got fired. So, he took a job at Stony Brook University, leading the math department. At Stony Brook, he created a mathematical theory that is still used today in quantum computing, Microsoft software, artificial intelligence. Even though he was successful, he felt something was missing. He divorced his first wife. He had a son with a serious genetic condition. He still dreamed of doing something bigger. At age 40, he made a bold decision. He quit his job to become an investor. His friends thought he was crazy. His father said it was a huge mistake. But Simons didn't care. And in 1978, he started his own company, Renaissance Technologies. His goal? Find secret patterns in the stock market. Simons believed that stock prices weren't random. They followed hidden rules. So he hired mathematicians instead of Wall Street experts, collected years of stock market data, used computers to find patterns. Computers in the 1980s weren't powerful enough for automatic trading. So, Renaissance had to combine math models and human decision-making. This caused mistakes, like when one of his partners, Leonard Baum, refused to sell U.S. bonds, even as prices crashed. Simons realized that humans made bad decisions, so he focused more on math and computers. He brought in James X, a brilliant mathematician, to help build better models. Together, they launched the Medallion Fund, named after their math awards. At first, Medallion lost money. Then, everything changed when another expert, Elwin Berlekamp, joined the team. His idea? Trade more often. Most investors buy and hold stocks for months or years. Medallion started making tiny trades every few minutes, taking advantage of small price changes. In 1990, Medallion made 58% profit after fees. By 2000, it made 98.5% profit, even during the dot-com crash. Wall Street was shocked. As Medallion became more successful, Simons made a big decision. He closed the fund to outsiders in 2003. Today, only Renaissance employees can invest. Why? The more people who joined, the harder it would be to keep the trading system secret. Simons and his employees became so rich that they bought an entire neighborhood, earning the nickname Renaissance Riviera. But what's the secret behind Medallion's success? Nobody knows. Employees sign contracts promising they will never reveal how the system works. Wall Street firms, like JP Morgan, are desperate to figure it out. One thing is clear. Renaissance stays ahead using artificial intelligence, big data analysis, super powerful computers. Their trading models are so advanced, they can predict stock movements based on CEO voice tones in earnings calls, how long shoppers stay in grocery store aisles, social media trends. The result? Medallion has beaten every other hedge fund in history. But even with all his success, Simons faced terrible losses in his personal life. In 1996, his son Paul died in a bike accident. In 2003, his son Nicholas drowned in Bali. To cope with grief, Simons buried himself in his work. Then, Renaissance got pulled into political drama. Jim Simons supported Hillary Clinton. His co-CEO, Robert Mercer, supported Donald Trump. Mercer was a huge financial backer of Trump's 2016 campaign. Breitbart News. Steve Bannon and Kellyanne Conway. But after employees started complaining, Mercer resigned in 2017. Jim Simons finally retired in 2009 with a net worth of $27 billion. He donated $500 million to Stony Brook University. He founded the Simons Foundation, which funds autism research, AI development, space exploration. His latest project, a giant telescope to study the origins of the universe. Jim Simons wasn't just the greatest trader of all time. He was a genius who used math to change the world.